Yeah, we'll give a couple of minutes for people to tune in. Yeah, like I was saying that while we are waiting for a couple of minutes, please let us know where you are tuning from and which industry you're currently working. Okay, so 1 more minute warning. 7:01 right now. Okay, hello everyone. Welcome to another episode of the Tamils and Finance web series. I'm Suganya Tharmalingam and your moderator for these sessions. I have Ken Kandeepan with us to talk about his experience in public finance. Ken is Chief Financial and Risk Officer at Ontario Financing Authority. Please help me welcome Ken Kandeepan. Happy New Year, Ken. Thank you for joining us.
Thank you, Suganya. I appreciate being given the opportunity to speak to such a distinguished group. This is an absolute pleasure. And from my position, I suspect that all of the people here are quite a bit younger than I am. So it's an absolute pleasure for me to reach out and give this the younger generation the benefit of my experience. Absolutely. I wouldn't go so far as to say wisdom, but definitely experience.
Well, who knows? We might become wisdoms here and there, right?
That is true. I was wondering, is there any way that we can take down the public finance for the common good? Yeah, this is sure. Absolutely. Thank you.
Let's do that. Okay, great. Yeah, so Ken, currently you are a financial and risk officer at a notable organization, but where did it all start? We all have our personal stories that shaped us who we are today beyond the title that we attached ourselves to. As you reflect on your journey, personal journey, there are key decisions you have made, lessons learned. We would love to hear some of the stories.
Thank you, Suganya. I'll try and make it, so I'll go through it fairly quickly. And also, one thing I want to do is I do sort of do a lot of presentations associated with my work. And one of the things I find is it's really, as we go further on, please send me questions because via Suganya or I think Ahilan, because an interactive session is far more interesting than just listening to me, go on and on and on. But going back to my journey, my wife and I immigrated to Canada in 1984. We were one of the first batch of immigrants, shall we say, Tamil people from Sri Lanka. And when we came here, I came here as a chartered accountant from Sri Lanka. I did my articles at Ernst & Young there, and I mentioned that only because a little after I came here, I was offered a position in Ernst & Young. I was also offered a position with the government as an internal auditor. And it just so happened that the government salary was slightly higher than the Ernst & Young because they offered me an articles of clerkship position. And I had to do a little bit in order to finish my CA in Canada. And given that we were, penniless immigrants fresh off the boat, my wife decided that I should go into the public sector. And so you just make these decisions, and at the end of it, you look back and see that your decision was made. It could be fate, it could be karma, whatever. And my wife decided that, she was the first job that she's an accountant as well. And the first job that she was offered was in the insurance industry. And she's continued in the insurance industry ever since and has done reasonably well there. So in the government, I was sort of banging around from place to place for a few years, trying very hard to find my niche. And working in the government requires a slightly different skill set than working in the private sector. So fortunately for me, about 20 years ago, 21 years ago, I joined the Ontario Financing Authority as an analyst, providing as actually an advisor on accounting standards. After joining it, I did my CFA, and that was quite challenging to do a CFA when you have a young daughter and you have a family, and you've also been not touched the books for over 10 years. So, but I managed to do that fairly quickly, and then I progressed to the manager of cash management, which was a very interesting position because you look after the entire revenues, the cash coming in and going out for the province of Ontario, which is, which at that time was much smaller. 20 years ago, it would have been about $100 billion. Right now, it's about $370 billion per annum. From there, I became the director of treasury. And then we went through a restructuring where I was appointed the CFO. And about 7 years ago, when the chief risk officer retired, my CEO and the board asked me whether I would be interested in taking on the chief risk officer position. But I wouldn't say my first love was accounting, but my first experience was accounting. So I said, I'll do it if they put the two positions together. So they created this new position. And I've been doing that for the last 7 years. So I'm actually at more or less at the tail end of my career. So retirement looms fairly soon on the horizon. But until then, this is a great job. I enjoy myself. It's very challenging. It's very interesting. And what you do is you do two things. I mean, you do the basic fundamental accounting as it applies to the public sector. And you also do a lot of the risk analysis, the mathematics, other people do the mathematics. We have a couple of PhDs in financial engineering and math. They do the mathematics. I just listen to what they tell me. But it still provides a lot of scope for analysis and for, opportunities to think outside the box and to bring in innovative procedures, which actually then benefits, hopefully, the province. So that's it, my journey in a thimble.
Wow, quite a journey.
Yeah.
So it's about 30 plus years in public sector, I guess.
Yeah.
So I wanted to dive into the world of public finance. And I think you touched a little bit about your role, but I really wanted to dive into a little bit deeper into that segment of it. So tell us a little bit about Ontario Financing Authority and its mandate.
Yeah, perfect. So the Ontario Financing Authority, basically, it's responsible for borrowing and debt management for the province. And as you know, I mean, this is not something, this is a great province. This is still the most economically strongest province in Canada. 40% of Canada's GDP, a little over 40% of Canada's GDP is generated by Ontario. The GDP in nominal dollars is almost $1 trillion and will hit trillion sometime this calendar year. So we are a pretty sizable player, not just on the Canadian context, but in the context of the world as well. Unfortunately, one thing which we have been not particularly good at is we have generated deficits. I think over the last 30 years, we have generated deficits with the exception of 1 or 2 years. So what is a deficit? Basically, we spend more than we earn, right, in our revenues. And how do you manage the shortfall? You manage the shortfall through borrowings. And the other thing that we borrow for is also capital investments. So as you know, I remember those days 25 years ago when Ontario used to invest about $3 billion per annum in capital. And it was basically, very minimal investment. And what happened was about 15 years ago, the sins of the past of successive governments not investing enough money in capital caught up to us. And from that time onwards, we have been investing about 12 to $13 billion every year. In part of it is in actual capital infrastructure, highways, hospitals, etc. And a lot of it is in shoring up or repairing existing capital infrastructure, which we also borrow. We have, and this is again, it's not a happy thing to say, but our net debt position, provinces are, as companies, the equivalent for companies is the net asset position, one of the metrics. For us, it's a net debt, and our net debt is $400 billion. Now, that sounds pretty scary, but you also have to consider the net debt in the context of our economy. And in terms of net debt to GDP, we are around 40%, 42 or 43%, which is actually not too bad. It's not the best, but it's not the worst either. It's by far from the worst. Now, so what we do in the Ontario Financing Authority is, whenever the provincial budget is issued, the provincial budget includes what is called our borrowing requirements. So we tell the investor community and the rating community, this is what we need to borrow, and this is how we are going to borrow it. And we borrow that based, primarily we borrow domestic debt. So how do we issue debt? And there may be a few in the audience who are part of our underwriting group. So debt is, we look at the markets, we select an opportune time to issue a debt. And usually domestic debt goes as, 10 years, 30 years, sometimes 5 years, $750 million per issue, sometimes $1.5 billion per issue, depending on market conditions. And some of it is private placements because we are asked by specific investors to allocate some of the debt to them. But a lot of it is underwritten by our underwriting, and our underwriting includes Royal Bank of Canada, a couple of the large American banks, CIBC, National Bank. National Bank, even though is primarily a Quebec-based institution, it does very well here, and it is one of our premier underwriters, and they underwrite our debt for a particular commission. Unfortunately, I can't reveal the commission, which is confidential. But once that is done, then the debt is issued to the market. And I'm sort of proud to say that in the last 20 odd years, we have never had a single debt issue fail where there was inadequate response from the domestic market. So, like I said, about 70 to 80% of our debt every year is issued in the domestic market. So, if you take this fiscal year, which is 21-22, our borrowing needs are $42 billion, out of which, as of now, we have finished $33.9 billion, sorry, 32.9, so almost 33. We have got $9 billion left to borrow, and we have got about 3 months left in the fiscal year. Now, it's not actually 3 months, because what happens is when we go close to the budget, we go into blackout. In other words, we don't issue debt in the market because the budget may impact our ratings. The budget may impact investors' perspective on what Ontario's debt should be. And so it is unfair for us to issue, and the province has legislation that budget should be issued on or before the 31st of March for the next year. So sometime the 3 weeks of March, we will go into blackout and we will not be issuing anything. So we've got about two months in order to finish the remaining $9 billion, which is not a particularly difficult issue. Having said that, markets have been very volatile. Those of you who form part of our underwriting community and who look at the fixed income market know that markets have been particularly volatile over the last few weeks. Rates have backed up significantly. I mean, Ontario's 10-year yield was around 2.0, 2.1, and it's gone up by almost 30 basis points to 2.3 at this point in time. So it's been a very volatile thing.
Yeah.
Now, sorry, go ahead, Suganya.
No, so as a CFO and Chief Risk Officer in this mandate, maybe you can touch upon a little bit about your role in this kind of decision making. And
so with regard to the borrowing side, what we do is, as the Chief Risk Officer, I have a team of about 17 people. they are essentially the watchdogs over the traders. So we have a fairly substantial trading flow. Our trading flow looks after issuance of the domestic debt. There's another section which looks after issuance of debt in foreign currencies, and we issue in US dollars. Yeah, that is the most common currency. But we also issue in euro, in Japanese yen, and in sterling pounds. Occasionally, we have issued in Australian dollars, but not that often. Yeah, that's a small market. It's a market smaller than ours. And what we do is we have very stringent policies associated with the risks that the traders can take. And my team monitors the activities of the traders electronically on a real-time basis, and we issue reports. And I see these reports. But I don't sort of concern myself too much with the daily reports. I depend on my staff to make sure that trading activities are within policy limits and within compliance limits. So in some ways, it's almost like a compliance officer role for those who are in the equity trading area. Mm-hmm. But what I do is a lot of the time I think of strategy. I think of ways in which we can make our borrowing program better along with the traders within the constraints that we have. How can we make it more efficient? How can we make less risk? So this is a fundamental difference between the private sector and the public sector, right? In the private sector, you would see the traders engaging in considerable amount of speculative trading because the objective is speculative trading within allocated risk limits because you want to make a profit. In our case, no, that's not what we want to do. We want to minimize risk as much as possible. So we don't do any kind of speculation. And how we minimize risk is we hedge. So there's a lot of hedging activities, and we can get into those later if anyone is interested. But hedging activities with regard to minimizing risk and ensuring that what we borrow is at the cheapest possible rate given the yield curve. So
interesting.
Yeah, and on the accounting side, it's pretty standard accounting. I mean, anybody who's been a CFO, I mean, you have been a CFO, Suganya, in something akin to an investment bank. Yeah, so it's pretty standard. It's not anything particularly different, except of course there's all the issue of valuing derivatives and making sure that derivative accounting goes smoothly, etc. All of that. That's a little bit different. That's about the only slightly different aspect from any standard accounting CFO role.
Yes, so there's a lot of abundance of debts, injected through this pandemic. And what is how do you manage that? What is your view on that?
That's an excellent question. So we have seen both national governments such as Canada and the United States and subnationals such as Ontario and the various other provinces do a tremendous amount of deficit financing and use that money which they've obtained through deficit financing in order to provide COVID time-limited COVID benefits to their constituents. So in the federal government, it'll be all of Canada. In us, it'll be Ontarians. And this is, so let's go to the federal government a little bit. I mean, the federal government, had deficits of over $300 billion, all of which was financed by debt. Now, one thing about the federal government is they have the Bank of Canada. So a lot of the debt that they issue is purchased by the Bank of Canada. And what it does is there's also a certain degree of, and what it allows is it injects more money into the system. Now, money, and I'm not an economist, I'm far from an economist. So, I mean, anybody who is an economist in the audience, feel free to send me a question or a comment correcting what I'm saying.
There are some watching us.
Yeah, I'm sure there will be people who are much more. But basically what happens is, one of the problems is inflation. But so far, yes, now inflation is very high, but the consensus view among economists, and I get this from reading Bloomberg and reading the Wall Street Journal, and primarily Bloomberg. I don't align myself too much with the Wall Street Journal. I like Bloomberg though. And is the consensus view is a lot of the inflation is pandemic related and is primarily due to the supply chain. Not a lot of it is attributed to deficit financing by the government. On the provinces side, deficit financing is dangerous because, I mean, for all of this, Canada is still a AAA credit rated country, right? None of the rating agencies have downgraded Canada because they feel fully confident that the country can manage this debt. Whereas our debt has been downgraded over the last 3-4 years. I mean, for the last 2 years or so, it has been pretty stable, but it's definitely not AAA. The only province which is AAA is British Columbia. And so for us, so the problem is, if we continue more with deficit financing and incur more debt, what happens is the rating agencies are going to look us even more critically. And if they do that, they're going to downgrade us. And what happens if they downgrade us? Well, the cost of our debt goes up, right? Yeah, exactly. So right now we have the spread, our spread between federal debt and at the 10-year for 10-year instruments is about 62-63 basis points. So let's say that they downgrade us a little bit. If it goes up to 80 basis points, you're paying 20 basis points unnecessarily, and that money can be used for the betterment of people in Ontario as opposed to paying interest. So right now, our interest on debt as a percentage of our revenues is about, I think, 8.2 cents. So in other words, 8 cents, approximately 8 cents of every dollar is paid on interest, which is not huge because the remaining 92 cents is available for everything else. But we don't want that to increase. We would preferably like to bring that down to about 4 or 5 cents. Yeah, exactly.
Yeah, going back to your core mandate, right? Just to have that.
Yes, exactly.
Okay, so I know that you touched upon the private sector, how public finance, in your case, the underwriting and pricing, everything, you are interacting with a lot of banks, pricing, underwriting. And so maybe, some audience here, they might wonder, like, if you are in the public sector, if you're navigating yourself and wanted to have some sort of exposures to the private side of it, this is one of the avenue they can get in, right? If they, I'm just thinking loud here, because the normal sense of it is, if it's like you even mentioned in your initial conversations, that public sector seems to be not really appeal to a lot of people. And the growth is not as fast as if you're in the private sector. But there are, like, you look yourself, you have done very well in your space, and you're very knowledgeable as private sector, especially in the bank and economy perspective. So maybe you can touch upon your interactions, you're dealing with the private sector, especially the banks and investment banking side of it, and just to give a color of your view on that.
Yeah, so we do. I don't deal directly too much with the investment banks because the problem is I'm the chief risk officer, and if I get involved directly in those dealings, then it's essentially a conflict of interest. So what we do is we manage what our traders do. Right?
we in our private side of it, we say is if there's no conflict, there's no interest.
Yeah, that's a very different perspective. So my dealings with the private sector can be my direct dealings are, I deal a lot with the big CA firms. So right now, we have EY is our internal auditor, and I'm their main conduit. I have Deloitte on doing a big contract with us, a consulting contract on some very complex issues related to derivative accounting, and allowing them to, they are giving us, it's a big contract. Then the other private sector dealings that we do is, one of my groups, one of the people in one of the sections or one of the areas in the divisions that I supervise is responsible for banking contracts for the entire province. So they issue the banking contract not for investment banking or underwriting or anything, but for the operating side. So for example, I told you, I don't know whether you guys remember, but I mentioned that, we have $160 billion coming in, and $160 billion, well, more than 160, because we are in a deficit position, about $170 billion going out. Mm-hmm. And we need bank accounts for this. We need banking services for this. And this thing is managed by one of the areas under in one of the divisions which reports to me. So that is more operational, and
Yeah.
and you have some very interesting things. So for example, as part of this is quite away from my borrowing and debt management hat, is one of the things in the COVID was the need for governments to actually pump out a lot of money to COVID beneficiaries, both businesses and individuals, for them to manage the pandemic. And a lot of this action and this activity occurred in the 2020 year. So we were, at least my staff, with me standing back and giving them guidance, were in the thick of things. And for the first time the government went to e-transfers. So in other words, you get emails from people, email addresses, and you do. So, I mean, for the private sector, that's probably something which has been in use for some time. For the government, it was a huge step forward. And one of the problems with that is there was a lot of fraud as well. I mean, the Auditor General's report very clearly pointed out the amount of fraud that happened. And that's not actually specifically a government thing, but primarily as a result of when you try to do programs very quickly and when you try to send out money very quickly, the world being what it is, which is essentially a small village, it alerts fraudsters from all over the world, not just in Ontario, not just in Canada, but all over the world, who try to see how they can get a piece of that pie. So through painful lessons learned, I think right now the e-transfer mechanism is in a far more secure place than what it used to be. And in that, I have to sort of, give my thanks to some of our banking partners. Our two co-lead banks are CIBC and RBC, to give thanks to who over the process as well, over this pandemic period, enhanced their security measures in order to reduce this and basically served as excellent partners to us. So that's the other side of my, the treasury side of my job. It's a fairly interesting job with an extremely large span of control. And just to say, I mean, not to sort of talk about myself, when I retire, they're actually going to split the job back into two, as a CRO and a CFO, because it's very difficult to find people who have the requisite skill set to do both and who are willing to come for what the government is paying.
Okay, this is a great segue into the career focus. I want to get into the inside of the role of CFO and CRO. I know that we all on our career journey and wanted to do well in our respective areas. Maybe tell us about how you position yourself to hold dual role as a CFO and Chief Risk Officer. I know you mentioned sort of the transitions, but I'm pretty sure to earn that kind of credibility, you have done something within the organization.
Well, true. I mean, it's also one of the most important thing is finding mentors. And it so happened that from the time I joined the OFA, simply, I think more as a result of happenstance or primarily because of some of the projects I was doing when I was an analyst, I had the opportunity to work closely with the guy who is our CEO now. And at the time, he was, when I joined, he was the CEO, and then there was a restructuring, and he was sort of demoted down to another position. But then he was too good a man to keep down, so he came back up to the position of CEO, and he's been in that position for roughly about 15 years now, so a little longer than I've been the CFO. And so, I mean, look, you can impress people. You can do a lot of work, but there needs to be something called chemistry, and that chemistry should click. And that is an indefinable thing. A and B can have excellent chemistry. A and B are great people, but A and C, even though C is a fantastic person, A and C may not have that chemistry. But so so that's important. And the corollary to that is make sure that if you want to move forward in a career, make sure that you go to a place where the culture is, where you fit into the culture, where you like the culture. And the culture can span a very wide spectrum. It's just that where do you fit in that spectrum, and where do you find yourself comfortable? And I found my niche when I went to the OFA, because I fit right into that culture. And the CEO was always my supporter. He always, wherever possible, he pushed me along. And it also, yeah, you're right, in the sense that what did I do in order to, and he was thoroughly convinced of my abilities. The board, actually, our board of directors was not very happy at all at one person taking on both jobs. They thought that the span of control was too much, and they thought that there was too much responsibility and too much authority under one individual, which is bad. But the CEO pushed past that. Now, one of the things that he was able to do that is it made him look good as well, because remember, he put together 2 senior management positions and thereby reduced the bottom line. Yeah, the bottom line benefited. The OFA's bottom line benefited, even though, they still had to pay me, but it's still not the same as
You're too humble.
Executives. Okay. Yeah. So you have one guy doing the work of 2 people, but he or she, in this case, it's me, who is not being paid the full amount. So it made him look as well. So you position it so that your career advances, but it also allows the people whom you report to look good as well, as though they have done something which benefits the bottom line. And that was one of the ways in which I was able to get the board to come around. And even though now that I'm, once I retire, I'm going to break those 2 jobs apart, he can still point to the fact that for 7 years we have been, which is a long time, which is a pretty long time. Yeah. So that's I think important. And the other important thing which I tell everyone is, unfortunate, I only realized this very late in my life, is know thyself. Know thyself means know yourself.
That is like, it might take whole life to realize that, right?
Exactly. But keep on looking at yourself, look at what your strengths are, look at what your weaknesses are. And it's very hard for people to look at themselves in the mirror and say, these are my weaknesses. So cultivate that ability. And once you know what your weaknesses are, then you can address them, right?
It's interesting.
Not all of those can be addressed. Yeah. I would like to be, I would like to be 6 feet tall and and have a full head of hair. Yes, I can't address those, but there are other issues that I can address, and you can do that quite
and absolutely. The know thyself is one aspect of it, but if you narrow it down to when everything's quiet down and you yourself only, what are you thinking? Where what goes in your head, and the obviously the positive side, also where you want to improve yourself, right?
Yes.
That's also a help just to reflect your strengths and possibilities, I guess.
Yeah,
I don't like the word weakness, so wherever possible.
Yeah. Potential for improvement, shall we say? Plus, also, it's your ego as well. Try to minimize your ego when and it's hard, right? It's hard. Let me also talk about a little bit.
There's a question in here.
Yeah. Oh, this is fantastic.
Yeah,
just about to talk about that, and Vincent's. Let me just. Can you?
I'll read this for you. Yeah. Looking back on your career, and specifically moments that you would consider you had lessons you learned. What is one piece of advice that you would pass on to young professionals, the audience today?
That is a very interesting question. The one piece of advice I would do is keep searching, keep growing, do not get comfortable, and keep improving yourself. One of the ways that you can improve yourself is read. Do read as much as you can, right? And it can be eclectic. It can be related to your job, but it doesn't always have to be related to your job. Read the newspapers, read books, and it improves your vocabulary immensely. It improves your writing skills, but it also gives you the ability to, when you're in any kind of social setting, or when you're chit-chatting with people who are your senior, it gives you the ability to talk and opine on literally any subject under the sun. And that is a very useful social skill. I saw a question from, I think, Wim Dasen.
Yes.
But it disappeared. Okay.
I have the question here.
Perfectly.
Going back to the, you mentioned about your progress, how you positions to, to hold that position, CFO and CRO. And the one thing you said is the chemistry, right? The chemistry between you and your superior really helped in
Yes.
project position yourself to become the position that you are today, right? So he's asking, can you discuss the chemistry aspect, especially as a racialized individual, and how do you cultivate a sponsor in a place of power? In this example, the CEO.
It is hard. So as a racialized individual, I mean, one thing I've seen is things have changed so much in the last 20 years, especially in the last 15 years. So like I said, I have Deloitte working for us on a large contract, and there are two partners who are involved in the contract who meet with us on a weekly basis. One of them is a white male. The other one is a brown woman. She's a woman who was born here, but whose parents are from India. Likewise, the chief partner in E&Y for internal audit, who is the partner for audit, is also a brown woman. So these kinds of things, when I entered the workforce in Canada, or even up to about 10, 15 years ago, were just non-existent. Yeah. So you've seen an explosion of diversity and people of color going on to positions of power. So the good thing about that is there is something in nuclear physics called critical mass. Critical mass is when, I mean, it's not a particularly good analogy. Critical mass is when the amount of uranium or plutonium in a bomb is enough so that the bomb can explode. So that's what's called critical mass. I define critical mass as the number of people of color and different people within the senior management and between the management in the management ranks of a company. Because otherwise, what that does is that reduces tribalism. And tribalism, as we all know, is a significant issue. So it's like this. You may have a different perspective from somebody else who is from the mainstream community. Even if your perspective is the right perspective, if you are in an environment where the other members of the management team are all white, or all part of the same community, even though within themselves they know that this is a superior approach and what you're talking makes sense, tribalism will by and large persuade them to support the other person because it's a member of their tribe, right? That's an innate, it's part of our DNA. I personally think that tribalism as an issue is much less in the younger generation. And a lot of it is because the younger generation, especially the ones who have grown up in Toronto and in some parts of the United States, depending on what state and what city they are, because they've been exposed to diversity literally from the time they were born. So they see their tribe not as people of the same color, but as people who are who have the same attitude and the same approach towards life. So there's but going back to me and how did I create that chemistry? Well, it also helped that my CEO was Jewish, right? So he himself was not a white male, and he himself was a member of a minority which has undergone a tremendous amount of persecution, and which I think as a result of that learns to look at people not what their color is, not what their background is, but what they can bring to the
the work ethic, right? That's also play a big role. Jewish, yes, particularly,
Absolutely, because I mean I have had bosses before that who treated me extremely well, who got a lot of work out of me, but and who would reward me in terms of writing extremely good performance appraisals, etc., but who would not lift a finger to see that I was promoted. So that was the big difference between this particular boss and my previous bosses. In the ways I was treated, there was no difference. I mean, I've always been lucky enough to be treated well, but taking that extra step to push that person's career along did not happen to me until I came to the UFA. And how do you do this as a racialized person? I mean, look, each person is different, but I think and I think the younger generation in that perspective, I mean, it's a more competitive world than when we were there. I mean, every year it gets more competitive. I'll be the first person to acknowledge that. But on the other hand, what you have is you have more people of color in senior positions who can help you, who can work with you, and who can be your, who with whom you can work together. I mean, they are everywhere.
And also, even just watching them growing, you see there's a possibility, right? It's a validations in many ways.
Absolutely, absolutely, absolutely. And in doing so, I mean, and that's the other thing. In doing so, you don't have to give up your culture. You don't have to give up your identity, and you don't have to try and make yourself into somebody whom you're not. You can still be yourself to some extent, I would say to a large extent, and still look for growth in the company. I mean, all you have to look at is look at the United States and look at the number of people of Indian origin who have reached extraordinary heights in the IT and in the finance sector. I mean,
one of the favorite, I guess, quote or I don't know, line is "Own who you are without apology."
Yes, who you are without apology. And I think, look, I mean, the thing is, it's a nice quote. Can I say that I've always been like that? No. There have been many times in my career, especially at the lower levels, where I had to hide who I was and pretend to be something or somebody else. I'll be very honest about it, because that was the only way that I could survive. And sometimes that was the only way that I could get along.
Yeah, but, fit in with the crowd, right? Yeah.
Fit in with the crowd, change yourself. But I think as we move forward, I think that the need to do that is less and less, because like I said, I mean, we are seeing much more diversity at all levels of the organization.
Yeah, so I really I have a questions on that. Like most of us are like upcoming senior professionals, and what do you admire most about the second generation born in Canada? It seems like you touched a little bit, but
oh my God, I mean, and I can give you a story for that. I think this was about 2 years ago. My wife had to have a small surgical procedure, and so once that was done, we got into we had parked our vehicle at the GO station in Markham, and so we took a taxi instead of having to wait for the GO train. We took a taxi all the way to Markham. And my wife was a little bit groggy, so after the anesthesia, so she was sort of leaning on my shoulder, and she was basically half asleep. So I looked at the fellow who was driving the taxi, and it was a Tamil name. So I was very pleased, and I started talking to him, and we had a very enjoyable conversation. He was a man who came to Canada more or less around 84, 85 when we had come. He said he had three sons. And the eldest was, eldest went to Waterloo and did engineering there. And that in itself is very creditable. And from Waterloo, he did an MBA and is working as an investment banker in one of the big banks. He said the second one was a senior manager with PwC, or one of the big 4 accounting firms. And the third one was still in a university. And to me, it's easy to attain, to become a professional, to become successful if you are coming from a long line of educated professionals, right? Because you grow up in an atmosphere of education, you grow up in an atmosphere of books, of dinner table conversation, which spans everything around the world, which talks about movies, which talks about books, which talks about politics, which talks about economy. But coming from this background, in order for them to do that, it's extraordinary. And what is even more something that we as Tamils can really be proud of is that story is not an unusual story. It's not that you have to go and look for, one person among 100 people where the parents were not educated. Yeah. Literally every community, every household, regardless of what the educational attainments of the parents were, the children have at minimum got into university, and a number of them have become professionals. So that to me is extraordinary. And that was what, I mean, to touch a little bit of history. Oh God, I forget the name of the book, but it was published by Amarnath Amarasingam, who is a who is an associate professor at Queen's University and who has come a number of times on CTV and on CBC, and has given a number of talks on radicalism, Islamic radicalism and terrorism. He's supposed to be one of the authorities in North America on that, and he wrote a book on actually the Tamil journey, and in that he quoted a statistic that in the 1960s, the 50s and the 60s, 60% of the doctors and the engineers, and no accountants will unfortunately feature that, but 60% of the doctors and the engineers in Sri Lanka were from the Tamil community, which comprised at most 12% of the total population.
Wow.
So that, yeah, extraordinary. Five times your representation. Talk about overrepresentation. Yeah. So that is our heritage, and that is what, and unfortunately, while the book did not look at the number of entrepreneurs, we were also overrepresented in the number of entrepreneurs in Sri Lanka, because that's what we were doing. And there's a humorous story here. The Sinhalese used to say this: if you stop a Tamil man, and my Sinhalese is very poor, but I'll say it in Sinhalese and then I'll translate it. If you stop a Tamil man on the street and you ask him where he's going, I mean, it was a patriarchal environment, so it was all men at that time, he will say "Kovilate yanawa nathang bankote yanawa." In other means, he's going to the temple or to the bank. that is how the Tamils were looked at. Anyway,
it's amazing. It's interesting in like our generation, the first generation as an immigrants, we came here for reasons. It was a choice that we made, and the careers, some of our parents and grandparents worked. It just, they didn't have a choice. They wanted to have something so that the younger generation can do well in their careers and their life. So we can't say, oh, you're a taxi driver, so your kids are going to be a taxi driver. That's not the case.
That's not the case.
Like you just said about our history, where we came from in our professional background, right? So no matter where we go, that will stay forever for us.
That will stay forever. That legacy of education, the focus on education, where you see people, people at the lowest level in our community. When I say the lowest level, I don't mean that in a bad way, but I say is socioeconomically at a low level, who will do extra jobs just so that they can make that money to send their children to extracurricular activities.
Exactly.
I mean, that is very common. We personally know people like that, and it is something that is to be admired in our community.
Okay, so if I flip the coin the other way around, so what can the second generation, can learn from people like you, the first generation who moved into this country with nothing but hope, right? Literally. So maybe.
Yeah, I mean, I think one of the things that you need discipline. You need fiscal discipline, both in your household. You need the ethic of hard work. I mean, look, you also need luck. Or I tend to be a little fatalistic, which gets me to a lot of arguments with my wife, because she's not fatalistic. She believes if you put your mind to it, you can achieve anything. I'm not exactly like that. I think a lot of it is your fate or your karma. So these are two opposing philosophies, or slightly opposing philosophies. So you need that luck, and not always hard work, effort doesn't always give you success, but it at least gives you, at the end of the day, it gives you the feeling that you have done your best, that you have done what you have done is as much as what any human being could have done. And if still the cards are against you, at least you have that feeling. But that is more in the minority. This is a country, North America, not just Canada, US too, and in my opinion, based on, I think the US may be even more. There are some bad things in the US, but there are also some good things. And in terms of meritocracy, I think it's just as good as Canada, or perhaps even better. And what it does is, the probability is that if you have the merit, if you have the ability, and if you put the hours in, while success is not guaranteed, success is not assured, there is a higher chance, there's a much better chance of being successful than literally any other country in the world. and that includes Europe as well. Europe, England, etc., is populated by people who have been there for thousands of years, white people who have been thousands of years. So it is very difficult for them to look at people of a different color and welcome them and consider them their equals. Here, that's not the case, right? I mean, white people have been here for about 150, 200 years at the most, little over 200 in the United States. And maybe the first settlers came 400 years ago, but they were just a very small minority. So everybody is an immigrant, and there's nobody who can look at you and say, you don't belong in this country, because we all belong in this country.
Yeah. Next time, that's what when they ask you, where you from, maybe you tell me where you from.
Exactly. And the younger generation should have the confidence and the ability to consider themselves as one of their. So I think I told you this story, Suganya, when we were talking, but I think it might be worthwhile to repeat it to the audience. I still remember this. This was many, many years ago when our daughter was young, when she was, I'm not even sure whether she was in her teens, maybe she would have been about 11 or 12. And like every young Tamil girl, she used to go for Bharatanatyam classes, and Bharatanatyam, you had to wear the shalwar kameez and wear the shawl tightly around your waist, so on and so forth. I mean, you guys know that. And on the way back, she wanted to buy something, and both my wife and I were in the car, and we stopped at a place. And then I looked at her and said, you know what, Kunju, do you want to go home and change and go into the store to buy what you want? And she said, no, this is my country. I can wear whatever I want and go wherever I want. And she went and bought whatever she wanted and came back. So that's the kind of feeling
that
I could have never done that. I wouldn't, even now, I don't think I can do that. But that's the attitude that you in the younger generation, you should cultivate and think that this is your place. You're here to own this place.
Yeah, it's your country.
Exactly.
Absolutely. I think we touched upon pretty much everything, and I have a few other questions going back to at the end of the day, this is a career focus platform. So the CFA, I know your CPA and the CFA, is it required? Is it helped you in many ways?
Oh, most certainly. I don't think they would have made me the chief risk officer if I did not have a CFA. So a lot of the positions in the Ontario Financing Authority, especially on the trading floor and on the risk control division, the trading floor, of course, reports to the chief investment officer, one of my colleagues, and the risk control reports to me. We do have a mandatory requirement that people should have a CFA. Okay. So a lot of times how we hire is students come as corp students into the OFA, then we hire them as interns. They manage to finish their CFA during the internship, and then you talk about and then we hire them on a permanent basis. Unfortunately, what happens is they work for us for a couple of years and then they go to the private sector.
Yeah, they need some sort of a milestone step on it, and then
there you go.
That's the same scenarios even in the private sector as well. They just get the experience and they feel that they can go somewhere else and expand their experience, which is perfectly fine. You expect that what we say in our private sector is, as long as we get 3 years out of this associates analyst, pretty much the time and money is invested properly. This is one of the questions came up just now with respect to the hedging strategy, what you're talking about, just to balance your.
I'll be happy to talk about that. Yeah, that's so what we do is so for debt, what happens is we issue domestic fixed income debt, which we don't hedge. We also issue floating rate debt. And so I'm going from the easiest to the most complicated. Floating rate debt is we usually hedge by use of floating to fixed swaps, right? And as you can see, a lot of it is risk aversion, right? So the problem is if your portfolio is overly weighted towards floating rate, if your debt portfolio is overly weighted towards floating rate debt, then you're liable, then you become exposed to interest rate fluctuation. So we try and minimize them as much as possible through floating to fixed swaps. So that's the simple one. Then the foreign debt. So foreign debt, usually when we issue debt in US dollars, It's almost always fixed income debt, but that debt is usually hedged back to Canadian dollars, either using cross-currency swaps or FX forwards. So one of the things that we have found is FX forwards are a very effective instrument. I think right now they give us a benefit of, anywhere between 25 to 35 beeps or compared to an equivalent cross-currency swap. So that is worthwhile. Now, when we issue debt in, sterling pounds or yen or euros, the problem is our currency. I mean, we are a G7 country, but it's very challenging for us to hedge our debt directly back in the sense to get a swap between yen and Canadian dollars. So what we do is we go the circuitous way, which is US dollars. A cross-currency swap into US dollars, and then the US dollar back to the Canadian swap. We can either use a direct swap or we can use FX forwards. So we keep on rolling the FX forwards on a 3-month period, and it is almost exactly the same as using a swap. There is a risk because there's no risk, no reward. So we have a benefit of somewhere between 30 basis points in comparison with a cross-currency swap. But then when you go to roll, there should be enough FX forwards available in the market at a reasonable price in order for you to effect the roll. Otherwise, you're going to be unhedged for about 3 months or until whenever you can get your FX forward. So that is the risk. And in order to mitigate the risk, what we do is we stagger our FX forwards. So we don't the entire portfolio, and there's about $20 billion of our FX debt which is hedged by FX forwards, and we don't roll all of them on the same month. They are staggered over 3 months and then rolled over. The final hedging strategy that we use, it is what is called even pace borrowing, and we are the only province which uses it. What we do is mathematically, and I've got one of my bright young kids there who worked out the mathematics for me a few years ago, completely beyond me, but I understood what he was trying to get at. Mathematically, when you issue debt on an even pace, so throughout the year, so let's say that you want to issue $50 billion, and you've got let's say 25 weeks in the year instead of and so that's $2 billion a week. If you issue $2 billion a week, which is called even pace borrowing, what happens is the chances of you coming close to the midpoint in the percentile distribution, and usually rates over the year, unless it's a skewed year, it's a volatile year. In a normal year, so-called normal year, the percentile distribution is a normal distribution. So you'll come as close as possible to the 50th percentile. Is that the best? No. Coming at the second or the third percentile is the best, but you can't do that always. So what we do that is, so how do we do that is we do what is called advanced rate setting and delayed rate setting strategies. Advanced rate setting is if we are ahead of even pace, that's delayed rate setting. If you are ahead of even pace, we buy Canada bonds and we sell them into the market. So if we are 1 week ahead of pace, and that 1 week translates into we are ahead by $1 billion in our pace, then we buy $1 billion worth of Canada bonds and we sell 1/5 of it on Monday, the second 1/5 on Tuesday, the third 1/5 on Wednesday, so on and so forth. At the end of the year, we are back on pace, so on and so forth. And we do the reverse. We short Canada bonds if we are behind pace. So what that allows us is, so as you can see, all our hedging strategies have only one objective: minimize risk. and that's how we affect that. There are others as well, but these are the main ones. So I mean, for the ones who are the real hedging nerds, the ones who are into this would have been quite interesting, I hope.
Yeah, maybe the hedge fund managers can tell us.
Yeah.
It's a question, but I'm not really sure. This is I can ask you this question. Is related to Sri Lankan's debts. Yeah, I thought so too.
But no, go ahead. I'll see what I can do.
Okay. What will be Sri Lankan's debt recovery plan? What is the long-run effect for Sri Lankan currencies in the global market?
So, okay, I'll be honest, guys. Sri Lanka is screwed, right? I mean, they have foreign reserve. What last I heard was $1.6 billion. Their bonds are junk bonds. they, as you know, as those of you who are in the investment industry will know, triple B is about the minimum investment grade, right? Anything less than triple B is basically you're going rapidly towards junk bond. Sri Lanka passed triple B long ago on the downward slide. So there's nobody actually willing to take their debt. So they are in deep shit. And the reason why they are in deep shit is, one, their tax collection mechanisms, like Greece used to be, is very poor. So there are huge number of tax avoiders. And the other significant issue is, when we left Sri Lanka 35 years ago, they relied on tea tourism and sending those poor women and men to the Middle East to work as housemaids and as laborers in order to send money back. 35 years ago, those are still the main foreign exchange earners. And of course, tourism is completely dead for the last 2 years as a result of COVID. So Sri Lanka, if it wants to move forward, has to go into, whether you like it or not, has to go into the IMF. The IMF will give them credit facilities. They will bolster up their foreign reserves. But you know what they will do? They will impose very harsh requirements on them. One of them would be to reduce their armed forces. Sri Lanka has an armed forces of 400,000 people. I mean, come on, who's going to invade them? India? And if India wanted to invade them, the 400,000 people, they'll invade them in about half an hour, right? Because there's no Prabharan to fight back. So they will say, first reduce your armed forces to about 50,000. And who is going to lose jobs is the Sinhalese people. Mm-hmm. Then they have these, like the Chinese, they have state-owned enterprises, all these corporations looking after literally everything, which are extraordinarily overstaffed and which constitute a way for Sinhalese politicians to give people who support them jobs. So the IMF will come back and look at them and say each one of them has to be cut back by about 50%. And they will say sell it to the private sector. So again, the private sector will buy over a corporation, and what will it do? It will reduce it by about 75%. So who's going to lose jobs? It'll be the majority community again. And what's going to happen? The government, which did all of this, is never ever going back to come to power. So they're not going to do anything.
Yeah.
So as to what's going to happen to them, I mean, they're going to sell
popularity versus
to China. They're going to sell bits and pieces to China little by little. And in about 25, 30 years old, China is going to run that country as a colony. I mean, instead of all of this, they could have given us a federal state at least, and we would have all been okay. Well, we couldn't have come here, but I don't know.
Chase the brain out of the country, I guess. So this will wrap our session. So I think we just passed 1 minute over, but this is a very fascinating discussion. Thank you for sharing your background, your experience. It's just amazing. By you sharing all these stories, it will allow others to see what's possibility. So thank you so much. Thank you, audience. Stay well and have an excellent 2022.
Thank you. Thank you. All the best. Very happy New Year to the entire audience. And thank you so much for inviting me. And it was an absolute pleasure on my part. And I hope you found some insights, if not at least a little bit of wisdom. Thank you. And thank you, Suganya. Thank you. You managed this very well. And I must say that I was very impressed with the level of detail that you brought into this. Before having this, Suganya had a 1-hour discussion with me, exactly the same amount of time, where she delved into literally every aspect of my career. And if you are representative, and Wim was managing the whole process extremely well, sent me regular emails, and you can assess the caliber of the individuals based on how much effort they bring to bear. And, one of my wife's cousins, who's a surgeon, said that a certain degree of obsessive compulsiveness is required for success. And I can see that and if you two are representatives of Tamils in finance, I'm really, really proud to see such caliber of individuals. Thank you.
Thank you so much. I appreciate that. Take care. Bye.
Bye.
Bye.